Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Monday, July 6th, 2009. Well, first off, I hope everyone had a wonderful long weekend, holiday weekend, July 4th, whatever you were, wherever you were celebrating. I do hope it went well. I hope you got a little relaxation. What we're going to do today, folks, is focus in on what the intraday chart is showing us for the rest of the day. Today's a very, very quiet day from the one perspective of the day following a holiday weekend. That's always a light day. We've talked to our premium subscribers about that for months and months and months now. Now it's time to just talk a little bit about it on the intraday analysis videos here to give you guys a sense of where this market could head. First of all, light volume is number one. Second of all, light volume can often float the markets higher, and what you're seeing is ever since the low made at 10:30, and by the way, when we talk about our holy book, you guys know it, In the Money Stocks, we have a holy book that we refer to as our, kind of Bible for trading or whatever holy book you want to refer to. It's basically talking about the keys to trading on an intraday, daily, weekly, monthly, swing trading, investing, long-term investing, whatever it may be, level. Now, the bottom line is this. Price, pattern, and time will tell you everything, and it does again on this chart. I'm going to explain how. First of all, take a look at your charts. We, and those of us that have been with us for a while, know that the key time frames are 10 and 10:30 and 3 and 3:30 to watch for moves. Take a look at this intraday chart, folks. The market gaps lower today. What does it do? For the first three candles into 10 o'clock, pushes up, makes the high right at 10 o'clock here, and then starts to reverse. The market moves down right into that 10:30 time frame right here, puts in a bottom at 10:30. So all of a sudden, you're seeing how the two time frames that we have isolated as the key time frames are the exact ones that are giving us the big moves in the early morning session. Now, the interesting thing about this is early in the morning, this is when you had the volume. So we talk about how light volume is a big thing in a kind of a day following the holiday weekend that we've seen on this July 4th. Friday was off, Saturday, Sunday, obviously here it is Monday again. And this is exactly what you want to see, folks. All right, so the heavier volume is earlier in the day, the first hour of the day till 10:30. The volume starting to lighten up. What you start to see is the market starting to trend higher. Take a look at this. The market trending up, hitting this key master level, which is right at 89.25. It pulls off that master level, and the 20 moving average is right there as well. Retests, pulls back, follows the 20 just down slightly, which is a bullish pattern. You got to know your patterns here, guys. Nice little bullish consolidation underneath the 20 moving average. At that point, you start to break out, and that's where you are right now. So the markets are actually trading up beautifully. It would not shock me to see the highs of the day get tested today in the afternoon. Absolutely not shock me whatsoever. Even a gap fill would not be shocking on the spiders here. The SPY, again, intraday 10-minute chart that you're looking at, which again, the SPY mirrors the S&P for the most part out there. All right, so again, just take a look at that. You can see how the moves are exactly proportioned. Price, pattern, and time. You have to know that. And just a little insert here, folks. This coming Saturday, there's a webinar. We're doing our methodology webinar where we're going to go into learning cycles, bullish patterns, bearish patterns, everything you could want to know about technicals, that's where you're going to find it. So I do encourage you to join that. It's really much more in depth than we get in the research center or in the chat room. So I do, again, encourage you to join that and be ready next Saturday. It is a Saturday 5-hour course, so very, very intensive. You'll be seeing the projector. You'll be seeing their screen on your screen. You'll be asking questions on a phone line, 1-800 number, and so forth. So it's a very, very good system here, and make sure to join up for that. Okay, again, the market's starting to inch higher. Not surprising whatsoever off of good consolidation on the 20 moving average. Good push up. You do have resistance coming into play, guys. The resistance point will be very, very heavy resistance at 89.65. 89.60 to 89.65 will be heavy. You see the green trend line right here? That's exactly what we pierced early in the morning. That's marking the high of the day also. This was a master level beforehand, and now what you can also see is notice the 50 moving average sloping down. That's going to meet that point right here at 89.60 to 65, and if the price goes into that, that should be a pretty heavy resistance. If that gets taken out, then you're going to look for this level right here to be your next spot, which is at 89.80. And if that gets taken out, then you can even look for a possibility of a move up to approximately the next master level, just over $90, 90.10, 90.15, somewhere right in that level, just above 90. Now, again, look at the push coming in, guys. We just talked about this, and I love these intraday videos because it gives you a sense of exactly how accurate we are. We just talked about how it wouldn't surprise us to test the highs of the day, and now we're just closing in on them very, very close now. As you can see, a big, big green candle. There's no volume behind it. All right, volume today is absolutely dead. We haven't even done 100 million shares on the SPY yet, and it's already past 1 o'clock Eastern time. So again, watch for a very light day. That always favors the upside. You can see your levels here. Again, your level would be your 89.60 to 65 level, then your 89.80, and then ultimately a little over 90, just about $90.10 or so on the SPY would be a very, very heavy resistance if we got there as well. Now, again, note the volume here. I'll draw that in. You can see the decreasing volume right down here is having a big impact on the markets. Notice how it's floating up. In addition, the biggest thing you've noted today, and I've noted today to our premium subscribers in the chat room, by the way, another great service that you can join, is that you can see ExxonMobil's really leading the charge here. ExxonMobil initially sold off hard on the morning. It was down almost $2. It was actually down over $2 this morning. And then ever since that first candle, it started to trend up, pull back, and then trend higher. And even though oil's been staying relatively sideways, you've seen Exxon get a bid. Why is Exxon getting a bid when oil's sideways? Well, a lot of possibilities there. You can talk about a little propping going on, a little fund buying maybe, but more than anything, I would focus on the propping going on. Whenever you see oil trading flat on a negative day and Exxon starts to rally and close the gap and start to rally up like it has off these lows, which is a monster rally. It was down over $2. Now it's down 73 cents. And when it's light volume like this, holiday volume, you always have to look at the possible trading programs out there, Goldman Sachs, whatever it may be, to lift this market off the lows and try and get it to be a neutral day. But again, at this point, the Dow has turned positive. The S&P is down 1.6, and the NASDAQ is down 18. Technology today, very, very weak. And I'll show you oil before we get into technology. Take a look at this. So here's oil trading sideways. Basically, it's had little pops here and there, but it's basically trading in a sideways range. Take a look at that chart, and then chances are, in a normal market, you would see Exxon trading in that general vicinity. General. And again, it could be a little off, but whenever you see ExxonMobil doing this, you know, that's the issue that I have. That's how you know, especially as it gets lighter volume, Exxon ticks up more and more. Look at how initially you had the heavy volume, the hard sell, then as soon as volume started to trail off, then the Exxon gets a bid. And that's, again, what you're drawing that conclusion, understanding what's going on out there. That's just understanding why we talked in the chat room today about not necessarily shorting the market or on any pop shorting the market. It's just not a wise choice in the light volume environment. You have to know your situations. This is all stuff we go over in the research center, all stuff we go over in the webinar, all stuff we go over in the chat room as well. You have to understand your situations, understand your trading environment, understand price pattern and time, and you'll be fine. All right, it takes time to learn it. Once you learn it, you become one of the elite traders at In the Money Stocks. And again, I do encourage you, whether you're a long-term investor, swing trader, or day trader, the Research Center will take care of all your needs there. The chat room is fantastic, and the webinar as always. Now, just to touch on technology again, guys, Apple Computer down nicely, although it is getting a little bit of a bid, but down about $3 on the day right now, just hovering off the lows. Technology, again, the weak sector today. Now, technology for a long time was the leader, but all of a sudden we've seen technology get a little bit on the weaker side. If you want to take a look at Goldman Sachs as well, Goldman going to the financials now. Look at the bid on Goldman. And again, guys, if there's one thing I've preached in these free videos intraday and to our premium subscribers, even in more in depth, explaining more in depth, Exxon and Goldman will tell you everything. In a light volume environment, if those start to tick up, this market will trade higher. Take a look at this. Look at here's volume in Goldman early. All right, right till around here. Then volume just starts to trail off right here. And look at the move on Goldman. So a little bit of buying going in on there. Interesting story also out was about someone who tried to steal the secret codes and software for Goldman's trading platform. Kind of an interesting situation there. You can find that, I'm sure, on a lot of different news broadcast systems, but a kind of interesting situation since we all know that Goldman's king there, kind of like trying to steal the king's treasure trove, if you will. See what happens to that guy. All right, long story short, folks, that's what you're seeing. Exxon Goldman, here's Exxon again. Take a look at this. Nice trend up. Beautiful move up. That's what you're looking for today. The rest of the day is going to basically revolve around the trend lines, folks. We have them on our intraday chart. I'll show you again before we sign off. I just mentioned that I wouldn't be surprised to see this market trend to the highs, and sure enough, just even in the matter of 5-10 minutes of this video, you've seen the market go right there now. We're just about to the highs of the day. You'll have a mega resistance area right around 89.60 to 65. Looks like that's where we're headed right now. Keep an eye on this market. You should see a little bit of pullback, but ultimately gap fill is very much in line at 89.80, and it would not shock me to see this market close flat on the day or even slightly higher. If you want to know what's going to happen tomorrow, that's where you have to join the Research Center, folks. Nightly videos of 30 minutes in length, hardcore technicals and analysis of the markets. Daily market reports with everything from key levels and master levels on gold, oil, 10-year, and dollar action, and S&P 500. Hot charts and alerts. We post another chart today. There was another key chart I posted, or we posted as a group, the Chief Market Strategist, on Friday. It dropped about 5% today. Nice decline as of the lows, 5% decline. And these charts are second to none. Analysis on the daily and weekly charts and monthly charts geared towards the swing trader and the longer-term investor. This is, again, gearing towards the longer-term investor, those of you the 401ks out there, and so forth. All right. And again, last but not least, Pro Trader watch list, technical tactic, hidden gems, all included in that Research Center. I do hope you come and join us. We'd love to have you. Take care. Have a wonderful rest of the day.